everyone, and welcome to the program. We're live to you from Lagos and Abuja, Nigeria's political capital. I am Bosun Omofaye and leading the show today from Abuja, Nigeria's political capital. Welcome to a brand new business week as we get into today's started Monday, the 8th of May. Wherever you're watching us in Nigeria and around the world, this is Business Morning. My co-anchor, Chimeze Obiwago, is in Lagos. Good morning, Chimeze.
Good morning, Bosun. It's a beautiful week and a beautiful Monday morning. I'm sure you're enjoying yourself out there in Abuja.
Yes, quite a lot to do here. A bit of a change in times and trading places, as it were. So I've got to trade a bit of places with you. Mm-hmm. Well, okay, let's get the week started. We've got quite a bit of business and market week to consider. Nigeria's President Muhammadu Buhari was out of the country on Sunday evening. The Vice President Yemi Osinbajo will be holding forth for the President while the President attends to his health in London. That's one story that economics and policymakers will be digesting from today, starting a brand new business week with the Vice President now be taking very key economic decisions in just about 2 weeks to May 29, when the Buhari's administration will clock 2 years in office. Meantime, analysts are awaiting key economic data from the Bureau of Statistics. The first quarter GDP, we're looking at that. We're now heading to the middle of the second quarter. We'd like to hear from Dr. Yemi Kale, who is the head of the Statistics Office, called the MBS. Inflation report for April is also on tap in the current week. We're looking at that towards the end of the current business week. Meantime, a big day in Abuja tomorrow, whereas the International Monetary Fund launches the regional, or what you call the Sub-Saharan Africa economic reports and the outlook for growth. That will be 10 o'clock in the morning. We're here covering that for our viewers here and around the world. You don't want to miss that. Tomorrow, Tuesday, is a big day here looking at that economic report. Meantime, the first quarter Capital Markets Committee meeting of the SEC will be taking place tomorrow, Tuesday, in Lagos. That's a Tuesday the 8th. And from the economic front, as far as the budget is concerned, a key question: will the National Assembly keep promise to finalize the budget 2017 this week? Now, back to the market. You see traders see stocks start softening as earnings deluge evaporates. We had about a dozen earnings last week, and those first quarter numbers are now tapering off. So stocks are likely to soften in the days ahead, starting today, as we see some profit taking along with some what the analysts are looking at. And very important on the calendar is the expectations from the markets, or from the MPC, that's the Monetary Policy Committee of the Central Bank. What are investors and dealers looking for? And part of the conversation you will start today on the program. Chimeze, I'm sure you would like to take us through the market week. We just finished quite a very interesting, on the stock market side, 1.25% last week. Chimeze Obiwagu in Lagos.
Right. Bosun, is quite an interesting week last week. And of course, I can see that the week is already busy, looking very busy for this week. But let's look at the equities market for last week. The market closed higher following demand across banking and consumer goods names. The all-share index posted gains for the second straight week, advancing by 1.85% to close at 26,235.63. The market capitalization was closed at 9.06 trillion naira, up 1.75%. Market analysts attribute last week's gain to the lingering impact of the more than impressive first quarter earnings posted by blue chip stocks, in particular the tier 1 banking names. Analysts see increased appetite for risk assets owing to data suggesting the economy is on the path to recovery, in particular the improved PMI survey results for the month of April and more positive news surrounding FX policy, principally the Apex Bank lifting the ban on currency allocation for some items classified as not valid for Forex. Now, the total volume traded for last week fell by 13.44% to close at 1.15 billion shares, with Zenith Bank, FBN Holdings and O&O accounting for almost 33.44% of the market volume. The value of trades increased by 26.38%. To 10.43 billion naira, with Zenith Bank, GT Bank and Oando accounting for 55.83% of the total value. The deal was 16,676. At the unlisted securities market, the index fell 1.24% to close at 582.60 points. The market capitalization there closed at 394.27 billion naira. The total volume of securities traded came to 433,012, valued at 42.14 million naira in 25 deals. And now let's look at the fixed income market. The Treasury bills segment of the market, the Apex Bank on Wednesday raised about 230.61 billion naira across the 91-day, 182-day and 364-day bills, in line with the expectation of most market analysts for the auction. The stop rates on the 182-day and 364-day came in lower than the previous auction, while the stop rate on the 91-day was unchanged. Compared to the previous week's level, average yield expanded by 6 basis points to 18.20%. Sell-off was most notable at the short end of the curve, while yield increased by 6 basis points at the long segment. On the other hand, modest demand ensued at the intermediate end. Looking at the bond segment, also investors were equally downbeat, with average yield rising by 17 basis points to 16.83%, suggesting the impact